Welcome back to TechKidFX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording has continued to hold above the 20-day MA here on the 4-hour chart. We are also facing a significant high at around the $0.5 mark. We have also continued to obey the Elliot structures, where I still believe that whatever we are seeing over here is the start of this explosive move to the upside in the formation of this wave 3. And before I get further into the technical analysis and also give you my next price targets here on the AGIX chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making a low at around the $0.33 mark, we started this massive bounce to the upside, obeying the Elliot structures, where you can see that I have this Elliot structure in yellow, having that as the first wave, giving us a peak at around the 0.5. Then we saw a corrective structure in the formation of this wave 2, fully maximizing our red target area in the formation of that wave 2. And after seeing the low for the second wave, whatever was expecting next is an explosive move to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.64043 mark, and that is the minimum that I'm expecting this higher Elliott wave count 3 to the upper side to do. And I said to you in my previous videos that we needed to continue holding within this blue target area that I was able to come up with by connecting the Fibonacci's from the low of the second wave to the high at around the $0.56 mark. And the moment we continue holding within this blue target area, then that will be enough confirmation that we are still within the formation of this higher Elliott wave count 3. And since we are seeing a bit of a breakdown here on the charts, I was expecting this blue target area to give us support so that we can see a reversal to the upper side, continue gearing up, and get back to the formation of this wave 3 to fully maximize our target areas. And you can see that after making a low at around the $0.42 mark within this blue target area, now we are seeing a reversal to the upper side in a move that has now given us a break above the 20-day MA here on the 4-hour chart. And since we are holding above the 20-day MA here on the 4-hour chart, we have the support that we need for us to continue gearing up and also see a break above our next significant high at around the $0.5 mark. And the moment we manage to break above it, then that could trigger even higher prices to fully maximize our target area at around the $0.64 mark in the formation of this wave 3. And once we fully maximize our target area, then we can expect a wave 4, then continue gearing up in the formation of this wave 5. And you can note that this Elliott wave structure that I have right here in yellow is a fractal wave within the formation of a larger Elliott wave count 5 to the upside, which is giving me the long-term scenarios that I'm expecting to play out here on the AGIX chart. And if I zoom out, you can see that after making our lower low down here, we started this massive bounce to the upside, obeying the Elliott wave structures, where I have this Elliott wave structure in red, having that is the first wave, giving us a peak at around the $0.13 mark. Then we saw a corrective structure in the formation of that wave 2, then a wave 3 giving us a peak at around the $0.678 mark in the formation of that wave 3, and also saw this 5-wave structure in formation within the formation of that higher Elliott wave count 3, having the wave 5 fully maximizing our target areas. Then we saw a corrective structure in the formation of that wave 4, fully maximizing our yellow target area down here as a minimum retracement area. And that's the reason as to why we are seeing the formation of this wave 5, and because of its impulsive nature, that's the reason as to why we are seeing this Elliott wave structure in yellow, which is a fractal wave within the formation of that higher Elliott wave count 3, just like the way we saw that in the formation of this higher Elliott wave count 3, and sketching out a minimum target area to the upper side in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gave me a minimum target area in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.82499 mark in the formation of that wave 5. So that is what I'm expecting AGIX to do here on the short-term scenarios. And also taking a look at the indicators on the RSI, we are trading at around the 52 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. Also taking a look at the MACD, we have been able to print a bullish cross, and we're also seeing an increase in the buying momentum here on the MACD, fully supporting higher prices in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.